I think actually initially our impact was perceived to be less. But all of us have some mix of government business. And then it's just the overall impact on the broader economy and consumer confidence when you have that kind of uncertainty. Mm-hmm. 800,000 people on furlough is a lot of people. So you have to expect that there's some impact on travel demand.
All right, that was Southwest Airlines CEO Gary Kelly earlier today on CNBC. As the airline's still facing turbulence after the government shutdown, that group has struggled in the last month. What's more, they have weighed heavily on the transports, which are now in a correction, an 8-day losing streak, underperforming the broader market. Bob Pisani at the New York Stock Exchange to break it down for us. Bob.
Hello, Scotty. Good to see you. You know, it's true the transports are more than 10% off the historic highs they hit in September. But the market, including transports, had rallied big time from the December lows. Now, remember, the recent weakness, particularly in the transports, has been going on, as Scott mentioned, for the last couple of weeks. The S&P is up 1% since February 21st. Trucking stocks are down 7% since the last week of February. Airlines are down 4%. Railroads have been relatively stable. They're just down 1% as a group. So what exactly is going on? Well, you heard over there, airline executives are warning about some weakness in the wake of the government shutdown, and fuel costs have risen. That would impact yields. On recent earnings calls, several transport companies like CSX, Norfolk Southern, and United Airlines did mention geopolitical risks as well. However, most companies seem to be fairly positive on customer demand, at least the ones I heard on the earnings calls. Much of this appears to be the markets in general topping out after a huge run. Remember, the S&P is up 11% this year, and the transports have held up very well since the beginning of the year. The railroads are outperforming. They're up 19% since the start of the year. Trucking and airlines are performing about in line with the broader market since January 1st. But in the past week and a half, other 2019 leaders besides the transports have stalled out. So semiconductors, for example, banks, industrials, and the small cap Russell 2000, all market leaders this year, they're all flat to down in the last 2 weeks. This tells me that the market's getting expensive and that we are reaching the limits of the benefits for the trade deal, and that some parts of the market, like tech and energy, are a bit overbought. Back to you, Scott.
All right, Bob, thanks so much. Bob Pisani there for us. 8 days in a row.
Well, I'd tell you what, I look at the transports. They're up 13.5% this year. They've outperformed the S&P. You can pick your spots. It's been a weak run. We've had some global macro issues. I look at airlines, and they're trading, again, back to we're going through a recession. I look at Delta. That's a recession multiple for the best-run airline at a time when I don't think that's what's going on. So if you look at airlines over the last couple of years, they're incredible trading stocks, folks. I mean, this is fast money. You've had trading ranges. You've had about 9 trading ranges up or down of 20% or more in Delta. I'd take a look at the stock at the bottom of the range here, I think.
To buy.
To buy,
right.
Yeah.
Well, they just reaffirmed today, right? $6 to $7 a share. I mean, that, as you're saying,
yeah.
It's not a crazy multiple. Obviously, airlines trade different multiples than other industries, but still, I'm long Delta. I like it here.
It's not like the rails have done bad by any stretch. I mean, this has basically been an airline-led decline. But no one's worried about just the sheer weakness in transports and what the tell is there.
You made a good point, Scott, earlier in the show. You said something about, just kind of digestion or maybe kind of pulling forward some of the gains that we might have had from a supposed trade deal. And I think all of us would be sitting here shocked if the trade deal was more encompassing than we expected, all intents and purposes. So at some point, it's just priced in, right? So you kind of overshot. I look at like 8 consecutive down days. It's only down a couple percent or something like that. It really is a digestion. And then you got to think about, as we get into April, that's when we're going to start to see earnings pre-announcements if we have them, and if not, then we get to the middle of the month and you have earnings, and that's really the next big catalyst for the market.
So I think there's a huge opportunity with FedEx right now. I think the valuation is really attractive on FedEx. I think the threat of Amazon taking over and delivering all these goods is really overdone. So I think a lot of the bad news is already priced into FedEx, and as e-commerce essentially doubles over the course of the next 3 to 4 years as a percentage of total retail sales, I think a company like FedEx is going to play a big part in delivering those goods.
I just want to make one point about FedEx. It had that massive gap, the 52-week lows. It was in the height of that sell-off back in December 18, I think it was, and the stock just got cratered and gave horrible guidance. This is going to be a really important tell. They're going to report on March 19th. That's one I'm looking at. Obviously, people think it's cheap. It was cheap in December. It's cheap here. It hasn't really outperformed, but that's something to keep an eye on because they they may be a good tip in what's going on.
And if you want to be a bear, I mean, you can actually look at the IYT, and if you take Boeing out of it, I mean, this has actually been pretty sloppy. Boeing has been the prince of the group, and certainly I think it should be. But again, back to the airlines, Scott, I think the airlines are their own problem. People are worried about airlines running their business efficiently. That's the story. It's about capacity for the airlines. I don't think it's about.
But it's not. You know, last week we had Booking.com. Remember the old Priceline? That gave really not a great outlook. We saw Marriott had some not so great things to say. So you think about it and you say the quarters that they all just reported, that's backward looking. The guidance was not anything to go in there and say, all right, it's all clear here. So you put it all together. And if we're talking about recessionary environments in Asia and in Europe, these guys all get a lot of their sales from over there. So it's not just about the U.S. when I'm thinking about transports. It is a global thing. And if we are seeing decelerated growth in those important regions, is it a forward-looking thing? Are we about to see
Delta reaffirming today is not a backward-looking thing.
No, I understand that, but they also reaffirmed in the beginning of in January.
But Delta reaffirmed business. They reaffirmed business class seats. They reaffirmed like their most expensive and their most business-oriented forward. I mean,
first week of the year, Delta gave guidance and it creamed the stock, right? So the reaffirming the bad guidance that they gave 2 months ago, have at it. Let's wait until. I'm just
when
saying.
Dan goes, have at it.
Well, no, but you know, I mean,
is that like talk to the hand kind of thing?
Yeah,
I'm done. I'm done.
Right.
Have it here.